Hey traders, Akil Stokes here, head trading coach over at tradingpower.com. And today I want to give you guys a special training video on how to identify trend. One of the biggest confusions, I guess you can say, that always comes up in the training course that I teach is the confusion between dealing with higher time frame and lower time frame trend, and which is more important, how does one convert to the other. So we kind of put that discussion to rest in a recent private strategy lab that we had this past Monday, and during that session we started off, as always, talking about the basics. And I said to myself, you know what, we have a lot of new traders here on YouTube that have just gotten into trading, that have found my videos, have found our website. And sometimes I kind of forget the audience that I'm talking to. And so why not put together a nice little training video, a basics training video on the basics of identifying a trend. So what I want to share with you guys here today is a clip from Monday's private strategy lab with my transformation members, showing you the basics of how to identify a trend. And hopefully this can be a big help for you guys that are newer in your trading journeys. Now, let's talk about trend and reading a price chart. And we're going to start with the very basics, right? The market moves in three types of ways, right? It moves in a bullish trend or an uptrend, right? Which is when the market goes up, bottom left to top right. It moves in a bearish trend or a downtrend. That's when the market goes from top left to bottom right. Or it consolidates, which means it essentially moves sideways and there's no pure trend that's in motion. Now, obviously a trend in real life doesn't actually look like this. It would be great if it did. Actually be pretty bad because we never have a chance to get involved. But in real life, it ebbs and flows. So let's take a look at an example. What do you guys want to do? Downtrend or uptrend? Downtrend or uptrend? Jim says, random question. The market's very quiet in August compared to September. Yes. Yep. Typically summer, so June, July, August are the slower months in the market. Summer vacation. All right, so an uptrend. So an uptrend always starts with, would you believe it or not, a starting point. Right? Now, before you ask the question, there's no true starting point in the market. Technically speaking, the only true starting point in the market would be the first time the market ever traded, the initial offering on the market. But the starting point as far as a trend identification goes is essentially going to be where the rotation and trend begins. So where the bullish trend begins or where the bearish trend begins. We move from a starting point, and we're doing a bullish trend right now, to an initial structure high, right? So this is going to be our first, what we like to call swing low to swing high, right? Where price action moves from the bottom to the top. Now, at this point, we do not have a trend. Understood? We do not have a trend. We simply have a single move. The market then retraces. This, all right, pay attention, has many different ways. I don't care what you call it. They're all the same thing. You can call it a retracement. You can call it a pullback. You can call it an outside return. You can call it relief if you want. You can call it whatever you want. It's all the same thing. A correction, right? So don't get confused over the terms. Retracement, pullback, correction, right? Outside return, it's all the same thing, right? And then following this move, if we are indeed in a bullish trend, the confirmation of that bullish trend, we're going to label this, let's just call it pullback for today. The confirmation of this bullish trend is a higher high, higher close above our previous structure high. And we call this level a new structure high. Okay? This is a confirmation of a bullish trend, this 3-point move. 1, the move up. 2, the retracement back. 3, the creation of a new structure high. And you can see in this point, the market is creating, right, higher lows, right? This low is higher than this low, and it's also creating higher highs. And as long as we're continuing that series of creating higher highs and higher lows, we are in a bullish trend. Real quick, Malvin says, Akil in trading patterns. We're talking about trends here, Malvin. When trading patterns, should the entry be after the close of the CD leg only, or should we enter the trade? The CD leg is still forming. It hits. The entry should be at the decompletion. So you don't have to wait. You don't have to wait until the close. It should be at the projected decompletion. An aggressive limit order. All right. So starting point. New structure high, outside return, new structure high, right? And as long as we're doing this, we have what type of trend? And guys, I'm gonna, if you have a question that's not with trend right now, I'm just gonna ignore it. So you can, hold it for later if you want. But if you have a question that doesn't have to do with the subject we're talking about, it's nothing personal. I'm just going to ignore it because I easily get sidetracked and I want to focus on this concept first. All right. Now, all you guys would agree, this is pretty simple, right? Pretty simple to see. However, in real life, right? In real life, does it often look this pretty? No. In real life, these outside returns, right? So these moves right here, let's just put a circle around it, will typically, look something like this. And this is where traders get confused. Right? When the market does something like this, because you're looking at this and then you're seeing, let's just draw it out. Here's what you're typically seeing. So price action rallies up. We create a new structure high here. So you're like, okay, clean, crisp, and simple. We're in a bullish trend. This is everything that Akil talked about. New structure high, blah, blah, blah. Market starts coming down. And you start seeing this. You're like, okay, well, what is this called right here? What type of move was just made? Yeah, you're looking at it out. This is an outside return. Again, pullback, retracement, whatever you want to call it. All right. So this is good, right? And what do we expect price action to do? Right? We expect price action to continue higher. And as long as we're doing that, right, it's all good. This is simple. However, where we get confused is when the market does something like this. We start pushing higher. We're like, okay, new structure high is on its way. Let's go. And then the market does this. And you're like, oh, this is going to be a lower low, right? This is going to be a lower low. And then the market may do this. And then we do that. And then you say, what? What type of trend are we in now? You say we're in a bearish trend because you're saying, Akil, we have a series of lower lows and lower highs. This is a bearish trend. And then the market does something like this. And you're like, oh, well, I just took the trend continuation short here because we were in a bearish trend, but now it rallied up against me. What am I doing? Right? Have you guys ever been here? This is where it gets tough. And typically what happens is, this is the area, let's just say all of this you see on your higher time frame. This is the area where you go down to your lower time frame and you're just seeing this part. You're blinded, right? Especially for those that don't look at higher time frame before going down to the lower time frame. All they see is this part. And they get a confirmation bias that says bearish trend, bearish trend, bearish trend, where the big picture is showing you otherwise. So here's a very important concept to understand. If you're interested in learning more about this subject, we actually have a free workshop over on our website talking about trend identification and a lot of other subjects as well. It's called Into the Gray. All you have to do is head over to www.tradingpower.com, click that Learn to Trade tab at the very top. Scroll down and you can check out this workshop, again, talking about why markets move, OODA loop theory, the IPDE process, and really the new structure high, new structure low principles that we talked about in the video clip that you just saw. So I hope you guys enjoy, and as always, leave me some feedback and I'll see you in our next video. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradingpower.com website, or also take a look and you'll see more videos available for you. Have a good one.